out there, people? I hope and I guess and I pray that everybody did have a wonderful trading week, whether you have a profitable one or a break-even one. All I'm concerned about is you having to stick to your plans, your rules, your discipline, your patience, your commitment, and your consistency. So this is your boy Harlem, and I'm back with another video. So on today's video, it's gonna be a beginner's guide type of video. I'm gonna be showing y'all and teaching y'all how to simplify or how to look for better entries with market structure or market behavior. You feel me, people? Market structure and market behavior, it depends on what you say it is. But on my side, I consider market structure being bullish when I see higher highs and higher lows. I consider market structure being bearish when I see lower lows and lower highs. What are higher highs and higher lows? Their behavior, I call them market behavior to my side, because every time a market brings out a higher high and a higher low and a higher high and a higher low, the behavior or the movement of the market is bullish, right? But the behavior is moving in higher highs and in higher lows. Same thing when the market is in a bear side, we're moving in lower lows and in lower lows, in lower lows and in lower highs. So the behavior is what is bullish. The behavior is bearish in lower lows and in lower highs for me, people. So now I want to make this video be simple, not too hard, not too simple, but I want to make y'all people take something from it, people. We all know that there are three movements in the markets: an upward movement, we have an up movement, and we have a down movement, and we have a sideways movement. You feel me, people? We have three main market movements in our Forex markets, right? We have an uptrend, we have a downtrend, and we have a sideways movement. But I don't consider people having to trade sideways movements unless you're trading support and resistance, because it's sometimes a simpler way to trade sideways movements, because you're taking it from support to resistance, from resistance to support until you find an overall breakout. Like I repeat, people, there are three main type of movements in the market. We have an uptrend, we have a downtrend, and we have a sideways movement, right? So now let's start off with an uptrend. How do you spot, or how do you see, or how do you tell if the market is moving in an uptrend? We have market pushing to the upside, we have market coming to the downside, right? We have market continuing to the upside, we have market coming to the downside. Market continuing to the upside, market coming to the downside, moving to the upside, downside, so on and so forth. So when we now look at something like this, we now say this is our what? This is our higher high, right? This is our higher high. This is our higher high. And then we have our higher low. And then we have our higher low. And then we have our higher low. So once price starts moving to the upside, once you see the bulls taking charge of the charts, you don't have to execute. Okay, so once price starts moving to the upside, creating a new higher high, before we can look for a higher low to take continuation trades, anticipating a new higher high. You don't have to take trades. You don't have to take trades anyway. You don't have to take trades anyway if the market is pushing to the upside. The only time you need to take a trade in an uptrend is once price pulls back or exhausts or gives us a higher low. You feel me, people? I repeat, you don't have to take trades if the market is pushing to the upside. You don't have to buy high. That's what I'm trying to say. You don't have to buy when the market has already reacted. You feel me, people? So let's say, for instance, you're taking a trade on the higher high. You see a buy right there and price pulls back. You see that you're taking an L. That's simply you taking an L. That's you simply giving the markets money. So now, if you see a higher high and price prints out a higher low, the only time you need to put your money to play is once you see what from the higher low, bullish, you see bearish depletion and that bullish momentum anticipating a continuation to the upside. I repeat, people, the only time you need to take a trade is once price gives you a higher low, and once you see bullish depletion you see bearish depletion and bullish momentum. That's when you can take continuation trades to the upside, anticipating what price will give you a new higher high. So at the same time, this is simply trading breakout and retest before me, because from a higher high, we have a higher low. Price continuing to the upside, breaking the previous high. You simply need to wait for a retest of the previous high, anticipation of a continuation to the upside. So I'm trying, like, now I'm sharing two gems with you. The first one, it's once price prints at a higher low, you need to look for what? For bearish depletion and bullish momentum. Or if you can't take a trade, from that higher low, you simply need to wait for price to break the previous higher high and wait for a retest, printing out a new higher low, and anticipate what? Continuation trades to the upside. You feel me, people? So a lot of things happen. A lot happens in an uptrend. When you see market moving in high highs and in higher lows, you need to know, from, if this is a 4-hour movement, you need to know that, like, from the daily, you need to know from the hourly, there are a lot of things happening. Price might be doing what? Price might be pushing, giving us a higher high, correcting with a bullish flag, and then break off the bullish flag and a retest in anticipation of a continuation to the upside. You feel me, people? But if you're looking at it from the 4-hour time frame, price will be moving like this. You feel me, people? Price will be simply moving in a clean uptrend. But when you're looking at it in an hourly time frame, you can be having bullish flags, you can be having double tops, you can be having double bottoms, you can be having symmetric triangles, you can be having some type of symmetric triangles and anticipated continuation to the upside. Or you can be simply looking for what? For that push phase and exhaustion phase, push phase and exhaustion phase, push phase and exhaustion phase, anticipation of what? Continuations to the upside. So this is how you can spot trades in an uptrend, or take continuation trades in an uptrend. Once price prints out a higher high, people, you don't need to take trades. Okay, you don't need to take trades while price is pushing to the upside. The only time you need to put your money to work is once price pulls back or exhaust, or gives you that higher low with what? Bearish depletion and bullish momentum, anticipation of what? A continuation to the upside. Or if you can't take trades from the higher low formation, you simply need to wait for price to break the previous higher high, giving us a new higher high and a retest of that higher high with a potential higher low, anticipation of a continuation to the upside with a what? A break and retest pattern. You feel me, people? So this is how you can spot an uptrend. Simple, not hard, and not easy at the same time. The only thing that you need to wait for, or the only thing that you need to be simplified with, it's you having to be patient, and you having to spot those entries, and you having to be positive with the trades that you're executing. So when you're looking at a downtrend, or when you are looking at a bear structure, you feel me, people? Price will be moving in what? Lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, and so on and so forth, people. So here, this is where you spot your what? Your lower low. You follow me? And then here, that's where you spot your lower high. You feel me, people? What the fuck texting me, man? Man, useless people. So this is how you spot a downtrend, or this is how you spot bear behavior, or this is how you can simplify your trades when you're trading a downtrend. So once you have price on resistance, let's say it's, for instance, this is our resistance right there. You feel me, people? Let's say now this is our resistance. Price is failing to break resistance, and we now start having what? That bullish depletion and that bear momentum. Price starts what? Moving to the downside. From price moving to the downside, giving us a lower low. You feel me, people? And price continuing to the upside, being in an exhaustion phase, giving us a lower high, and then price continuing to the downside. The only time you need to take trades, people, and the same thing with the uptrend. The only time you need to take trades from a lower low, lower high behavior, or from a bear market, or from a bear structure. The only time you need to execute your short trades or your sell positions, that's once price prints out a what? A lower high. People, once price prints out a lower high, you need to wait for what? For bullish depletion in bear momentum, anticipating of a what? A new lower low. I repeat, people, once price prints out a lower low, an all-time low, and price exhausts or pulls back and prints out a new lower high, the only time you need to take trades is once you see that bullish depletion and that bearish momentum, and what an anticipation of a continuation to the downside of price breaking what that lower low. If you simply can't take trades on a lower low, on a lower high, people, same thing. You need to simply wait for what? For price to break the previous lower low and come back for a retest right there, giving us a new lower high in anticipation what of a continuation to the downside. So this is so how I explain the lower low and the lower high. It's more like I explain the higher high and the higher low. So I won't waste time on what on the bear behavior or the bear structure. But the only thing that I need you people to understand, it's once price prints out a higher high and a higher low and continues with a higher high and a higher low, just know that like we are in a bullish structure, or we are in a bullish market, or we are having a bullish behavior. You feel me, people? Anticipate what? Continuation trades to the upside, and price continues until we have some sort of what? Some sort of depletion right there, price failing to break, starting moving sideways, and we see what? That bear momentum and that retest of the correction right there. We anticipate what? Lower highs and lower lows right there, people. So structure is somehow like this. Not to say it's like this per se, but this is how most of the time structure is spotted. You follow me? So how do you spot a reversal in an uptrend? To my side, I have 3 confirmations to confirm a reversal in an uptrend. Same thing with a downtrend. So in an uptrend, when price is moving in higher highs and in higher lows, and we now start what? Having that depletion right there, having that depletion. The only time I'm gonna put my money to play, or the only time I'm gonna see price having a reversal, it's once we have a big momentum right there and a retest of what? The previous higher lows or the previous correction. You need to simply wait for what? For that higher low formation and anticipate what? Continuations to the upside, to the downside, anticipating a potential reversal. Same thing with the downtrend. When price is moving in lower lows and in lower highs, and you see now prices starting to exhaust right there, and you see now price correcting, the only time you need to put your money to play is once we have that bullish momentum and the retest of the correction, and you need to start looking for what? For those higher highs and those higher lows, people. But at the same time, you need to remember that like in a downtrend, you can sometimes have a what? A potential head and shoulders reversal. You follow me? So with what? Price giving you a left shoulder, a head, right shoulder, anticipating of what? A reversal to the upside. So the only time you take your money to play is when price breaks the neckline right there, anticipation of a what? A correction, or anticipation of a reversal to the upside. Same thing with the uptrend. Once now price like moves in high highs and in high lows, and you see that like depletion right there, and you see now price reversing to the downside, you always need to remember that we're having a neckline right there. So with now price printing out a left shoulder and a head and a right shoulder formation, the only time you need to put your money to play is once price does what? Once price breaks out of that neckline right there. You feel me, people? Once you have a breakout of the neckline, meaning once you have a higher low, right there, in a higher high and a higher low and a higher high, price coming back, pulling back to the previous higher low right there. In terms of price creating some sort of support right there, and price prints out the left shoulder, and price breaks out of the higher highs, of the higher lows, or the support zone, and comes back for a retest, you need to simply look for what? A reversal to the downside. But at the same time, a lot of traders call the zone and neckline right there. So people, you follow me? So this is how you can spot right reversals of an downtrend, of an uptrend or a downtrend. But at the same time, if price is sometimes moving in high highs and in higher lows, and you have a higher low right there and a high not higher than the previous high, you need to simply know for what? Note that like price might be having a potential reversal. Let me explain this one. We're having a higher low right there. 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 And we're having a what? A high, not higher than the previous higher high, anticipating a what? A potential reversal. At the same time, you might say this is a double top, anticipating what? Price having a reversal to the downside. Same thing with what? with a downtrend, when prices moving in lower lows and in lower highs, and you now see a low, and you now price comes back, printing out a lower low, not lower than the previous lower low. Just note the like price might be printing out, might be showing us a potential reversal because we're having a higher low, we're having a lower high right there, having a lower high right there, lower high right there, lower high right there, and we're having a low, and we're having a lower low, not lower than the previous what, not lower than the previous lower low, anticipation of a what, potential reversal, people. So those are the basics of Forex. This is textbook Forex, people. I just wanted to share this. I just wanted to share this video, people, just to show you how you can simplify your entries or how you can spot simple entries in Forex. This is not easy. This is not hard. I repeat, you need to know your structure. You need to know your zones, like your support and your resistance. You need to understand your behavior, your higher highs and your higher lows. And you simply need to understand how do you trade breakouts, because sometimes some traders don't want to catch trades on a higher low. They want to catch it what on the higher high, on the break of the higher high, and the retest of the higher high, printing out a new higher low. Or they don't want to trade, or don't want to place trades on the what, on your lower low, on the lower high formation. They want to wait for price to break the previous higher low. They want to wait for price to break the previous higher, the previous lower low, retest of that lower low, giving us a new lower high, anticipating of a continuation to the upside. At the same time, people spot reversals of an uptrend once you get that head and shoulders, that double top, or the high, not previous, not higher than the previous higher high, or once you have that depletion and that momentum in that base sentiment, or at the same time, people spot reversals in a downtrend once you have the what, once you have that inverse head and shoulders, that double bottom, that correction and the break of correction to the upside, or that, or the what, or the high, or the low, not lower than the previous what, lower low, and you look for what, a potential reversal. So people, I just wanted to share this video, people. This is not easy. This is not hard. You need to simply understand what your zones, your structure, your behavior, and your what, and your trend as an overall. So people, that's all I got on this video. I just wanted to make this video be effective, and I wanted to share this video so I can put game in some of your more videos like this gonna be coming up, people. More videos going like this gonna be coming up. But I always share how I trade support and resistance. Now I'm trying to share how I trade what, how I trade behavior, or how I trade structure. You fool me? So I will have a trade breakdown. If I do get a trade, if I do execute a trade and I have a proper trade of how I took a trade in an uptrend or in a downtrend, I will have a trade breakdown in correlation or in relation to what I just shared in this video. So that's all I got, people. That's all I got, people.